AVI's first half headline earnings per share from continuing operations rose by 32% to 194 cents, underpinned by a weaker rand and improving operational performance. South Africa's third largest food producer increased revenue for the 6 months ended December by 9% to 4.5 billion rand, as the group's fashion brands showed profit growth from increased volumes and improved gross margins. Right, let's get straight into that look at the improved gross margins, Chris. We've got gross profit margins improving to 46.3%. And as I said, the fashion business side of the business is really what's boosting the overall earnings here as we look at AVI. What are your thoughts on its earnings so far?
It's quite phenomenal. I went to the presentation today, and it was interesting to hear Simon Crutchley giving a bit more flavour, to these results, and looking especially at what you're talking about here, the Spitz and Kurt Geiger side of things. In this kind of market, you would intuitively think that it wouldn't do that well. Quite the reverse. They're opening more stores, and even in rural towns like Louis Trichardt, for example, sales of these things are just flying off the shelves. I think it's all about aspiration. It's about upwardly mobile young people who are wanting to buy these products. I mean, some of these shoes are costing a basic of about 2,000 rands a pair, this type of thing. But and we're talking about people who only earn 5,000 or 6,000 rands a month, and yet they're buying them. That, coupled with, I think, a turnaround in things like Irvin & Johnson, Snackworks, okay, and Tice, it's a little bit of a mature business, but nevertheless, across the board, I think improvements coming through at a rapid pace.
Paul, let's look at their fashion side of the business, as they call it. If you look at footwear and apparel, contributing 14% to revenue, 27% to group operating profits. And if you look at where the earnings growth is coming through, that's where the growth is coming through. 10,000 Rand, I'm told, is roughly the price you'd pay for Jimmy Choo's. That's one of the fashion brands it has in the footwear space. What are your thoughts on the fact that it's increasing its profits from this part of the business?
Look, it's very impressive. As you say, the margins there are high. So this was a group a couple of years ago which was seen as somewhat dull, somewhat boring, solid performer. No real future, though. Anxieties about whether or not the consumer economy was going to carry it through. And at the time Simon announced that they were going to buy this thing, there was massive skepticism, because people said, what on earth have luxury shoes got to do with, snack foods and the likes? And he was at pains to point out that it's about brands and it's about upselling people in a consumer-oriented environment and so on. And in the same way that people will aspire to, consume a better class of biscuit, they're going to look to consume or wear a better class of shoe. So we know that South Africa is an economy that's quite brand conscious. So I think it's paid off. It certainly has paid off, and the timing was quite good. The funny thing, though, is I know Simon personally, and a couple of years ago, he was extremely bearish about the future of the company. And he was extremely bearish about the future of the global economy and of South Africa in particular. So I hope at the results today, Chris, that he was in slightly better fettle and that he was making apologies for his negativity.
He wasn't making apologies, but he was very upbeat. No, very, very upbeat. Yeah.
Very upbeat. So which part of the business is he most upbeat about? Because as we say, this fashion side, the aspirational side is growing, but they've still got solid brands. If you look at some of their food brands, businesses, it's Five Roses, it's Fresh Pack, it's Coffee Haste, it's stalwarts, if you call them, in South Africa.
Look, he's pretty bullish about all parts of the business. But if you look at some of the more basic side of things, tea and coffee, for example, I mean, they had to put in the exquisitely named Creamer Tower. This is part of their big capital expenditure program earlier this year, and they got quite a lot of capex going in. It's interesting, last presentation 6 months ago, they showed us a video of the kind of capital expenditure that's taking place here. So it's not as if they're just resting their laurels, sweating the assets, thinking, this is great. They're putting a lot of time, effort and money into existing businesses and growing them. And no, I think across the board, I mean, look, Irvin & Johnson is a notoriously volatile side of the business. But even there, they've got some nice contracts there, benefited from the weaker rand. It's difficult, really, to find any dark spots with in this thing at all.
Do you find dark spots, Paul? Because we mentioned the fishing side of the business. What about the volatility of it? Should they be looking to divest in it? And of course, we'll get the views on that. But and all their threats also,
Look,
given the fact that sustainability is an issue in terms of
There's definitely something going on in the oceans. There used to be the fish were this size, and you just had to throw a net over the side of the boat. No, not at all. And then you would just catch them. They'd be jumping onto the boat. Now apparently they're that size, the fish, and you have to go further and further away from Cape Town in order to find them. So I don't know whether that's as a result of overfishing or the changing global temperatures, but one way or another, the fish industry is not looking all that great.
And becoming more regulated.
Yes, so the tariffs and the quotas are being allocated on a more prejudicial basis as far as the big corporates are concerned, and that's been going on for a while. So I don't think that's a part of the business that they're all that wild about. They had that Argentinian business called El Pesca, which they bought in a weak moment and have been trying to get rid of ever since. But you know, if it's only 15% or thereabouts of the business, it's not perhaps the end of the world. But I wouldn't be surprised if they, you know, narrow that down a little bit, or if the product becomes more of a sort of premium end type thing. But another thing just to put on the table is, I remember a couple of years ago they were very worried about imports. So you would get Eat Some More biscuits, which was their brand, and then you'd get some other thing, Scotch Some More, Save Some More, or Scoff Some More or something with a similar tartan brand. But for one reason or another, that seems to have either dissipated as a source of concern, or maybe the rand has benefited them some way. They don't seem to be worried about that anymore.
Yeah, the rand's helped them to a certain extent, but I think they've also, coming back to what I was saying, becoming more globally competitive on pricing. You know, they become far more efficient in the way they actually make these things.
Let's talk about Africa. Was Africa mentioned at all by the management team in terms of their strategy? Because they seem to be very much still geared towards South Africa right
Africa's
now.
there. It's housed under AVI International. It's small, but it's growing, and I think, you know, they do see big prospects in that one. If you think about it, I mean, there's not a great deal of capacity to make virtually anything in most parts of Africa. So I think these kind of products, I think, will have a big future in Africa. Yeah.
Any views on how they're going to attack, or how they're going to rather approach moving into Africa and extending these brands?
You know, Sam, it's a tricky one because logistically, getting any kind of product into Africa from South Africa, and you only have to talk to Whitey Basana at ShopRite to get a flavour of how difficult this is. It really is the devil's own job in many instances. Roads just kind of disappear, particularly in the rainy season. And if you really have to have decent supply chains, it's not an easy process. So this is going to be a long-term prospect.
Something else I'd like just to put on the table, Sam, is the shift in the dividend policy, because historically companies that have strong balance sheets and strong profit growth, you know, would have been inclined to pay some of that out in dividends. But there seems to be a shift here where they're going from the, you know, sort of 2 times cover down to 1.5. So they're signaling that they don't think they need as much cash, or that they just want to be more generous. So the yield goes higher. I mean, that's probably part of the attraction of the shares and why they've done so well recently, Chris.
Yep, and he was asked about that, and he's very comfortable that even by reducing the dividend cover here, they can still cope with that very heavy capex that I talked about. So again, this thing is pumping cash. It's got a very, very healthy cash position.
But to what extent are they geared towards a recovery in the consumer environment? To what extent are they geared towards consumer spending?
Bear in mind that most of AVI's products are in the kind of upper echelons of consumer spending. This is not house brand type stuff. This is well-known products at the upper end. And you know, it's maybe something we can develop as this program goes on. But if you look at what's been happening in consumer spending in the past 2 or 3 years, there's been a major dichotomy. Those people who are in jobs, are in gainful employment, are not worried about their job prospects, are spending money. And this is not a South African phenomenon. It's happening all over the world. You just look at luxury goods, for example, in Europe. So I don't think there's a problem as far as these guys are concerned. They're in a very similar space, I think, in many ways to Woolworths, for example. So, you know, as long as those consumers keep spending, and there's no sign that they're going to slacken off in any time soon, then I think they're onto a good thing.
Okay, so let's get your recommendation on the stock. 46 Rand, there or thereabouts today. Stock closed up on the back of these earnings. Would you be buying the stock?
Well, we don't actually hold it, unfortunately, but I wish we did. And it's a very, very hot stock. I would have a very close look at this.
Very, very hot from someone who went to the results presentation. Paul, from someone who's evaluating it in the consumer space right now.
No, I do like it, so I'd be hot in it too.